Welcome back to Rewiring Prosperity, the Win VC series where we're celebrating success stories of women securing venture capital in Atlanta, Canada. I'm your host, Vanessa Paesani, Executive Director of the Pond-Deshpande Center at the University of New Brunswick. So let's be honest, less than 5% of venture capital we know are going to female founders. And that's not a pipeline problem, it's a systems problem. This podcast is about women who are navigating the system anyway, and of course, changing it in the process. In this episode, I'm honored to be joined by Cathy Bennett. Cathy, if you know her, is a force. She's a seasoned entrepreneur, investor, and former finance minister of Newfoundland and Labrador. Today, she's a co founder and managing partner of Sandpiper Ventures, one of Canada's first women led venture capital funds backing women founders. She's built companies, led at the highest levels of provincial government, and now sits at the table where capital decisions get made. In this conversation, we get into how capital actually moves, what founders need to understand if they want to raise, and why shifting who controls capital is one of the most important levers we have to change the economy. So let's get into it. So thanks so much for being here today as part of our WinVC podcast, Cathy. Really excited to talk to you.
Happy to be here.
So the first question I have for you is you've sat on all sides of the table from operator to policymaker and now investing and among other things that you're doing. And so in your view, what do most founders misunderstand about how capital actually moves?
Yeah, so I think one kind of consistent theme from very early stage founders is that capital doesn't move um, because your idea is great, right? It moves because there's a commercial transaction that is coming from that idea that can be scalable. And for women in particular, what uh, I think investors are looking for is for them to show off that well-known skill they have to be able to execute. Because at Sandpiper, we invest in predominantly companies that have a female founder or a female co-founder. We already know that women are risk aware, and what we're looking for is how they take that risk awareness into scaling. I think we really want to watch things like timing and momentum because those are fundamentals in getting capital moving. And I think there's lots of good ideas that don't get funded. What
Mm.
actually gets funded is the execution around those ideas and how you can actually scale. As I said a minute ago, those customers, those transactions that actually build a really robust revenue model.
Yeah, that's really helpful. And when you're looking at a company at Sandpiper, what can you share about what separates the ones you lean into versus the ones that you decide to pass on?
Yeah, so I think the clarity of the problem. So sometimes we see really crisp founder and team awareness of what the problem is and how there's an urgency for the customer to consider a transaction. We're definitely looking for what I would say is, learning velocity. One of my new
Mm.
favorite words for 2026, velocity. Um, not we're not looking for perfection because frankly, when founders are making mistakes, that is, where they're actually learning a lot. But we are looking for evidence that they're learning rapidly. And so the mistakes are getting fewer and fewer and that they can actually scale with a market fit product in a company that can attract talent. So those are, some of the key ingredients. I guess the last one I'd share is like a credible path to a large and real market, not a theoretical one. I know when I talk to founders, I typically, nowadays say, I think it's really important for you to consider if you're interested in VC money, how do you look at, minimally 3 countries that you're going to sell into?
Mm.
Um, most founders look to sell in their own home country. Typically in the past and still today, we seek founders seeking sales in the second country of the US, and that's great. Comes with some risk in the current circumstances. So I tend to also like to see, where's a third country that they're looking at to expand their product, because that gives me a sense of whether or not the founder has natural connections to that third country or natural instincts around a particular country where the product might be, and the technology might be well received. And
Yeah.
ambition. Ambition is
Ambitious.
actually ambition is to grow, is,
Mm.
foundational, I think, in the companies that we look at, investing in.
Yeah, well, the ambition part's interesting, and I had a question for you about the learning velocity. I like that term. Um, I'm wondering if part of that, like, are you sussing out or evaluating what I might call like openness, or like how are you? Can you tell us a little bit more about that?
Yeah, I think that there's, as a venture capitalist, we wanna rely very heavily on, transparency from the founders as we are, making a decision about investment, but also more importantly, when we're working with a company after we made an investment, because I think most VCs, like to add value is in problem solving. And in Sandpiper's case, because we have, general partners that have a tremendous amount of corporate and global experience, we want to bring that to the table in support of the founders that we work with. So that's, I think, you know, a benefit of the transparency is that you reap sort of what you sow. The more we can have clarity of what are the acute challenges that a founder might be trying to solve, the more we can actually bring to bear some of those suggestions that we might have as a team.
Yeah, well, that makes sense. And something that I've heard a bit throughout this is, yeah, how do we, build and support you, and really so that we're helping you succeed. So that's great.
Mhm.
Is there a red flag that you would advise people to be aware of as they're going out to pitch?
Yeah, I think one of the red flags, a couple anyway, are when they've kind of over engineered. They're over engineering before revenue. Um, so I mean, revenue is what we're buying, right? And because the revenue is what um, is going to bring the valuation of the company up so that we can actually make a return. So when there's um, a real over engineering before a founder wants to get to market, sometimes that's an indication that their go to market strategy isn't fully formed, and that's a bit of a flag. Another one is confusing activity with traction. So if
Mm.
founders are consistently saying something like, "Well, I believe we're going to do this," and then quarter after quarter, they have an inability to kind of hit the whatever this is. That's also a red flag because in those cases, you're really kind of trying to understand: is it the product? Is it the leadership? Is it the team? Is it the scale? Is it the market? And those are really important questions in the early stages of the companies that we invest in because traction is material to increase valuation. And when they miss a moment of momentum, that becomes very problematic for us to support them through second raises and then other investors
Mm.
to kind of buy us out and continue to hold equity in the company.
Yeah, that's really helpful. So we often hear about the 5% problem, and we hear different, like if it's 5% or whatever in terms of a relatively low amount of venture capital flowing to women. We hear different, reasons for that, and ways to address it. From where you sit, what's actually driving that gap, and what might not be being said out loud?
Yeah, I mean, I get the privilege, I guess, because of my age and stage of my career, to say I think it's a system failure. Systems generally doesn't matter if it's venture capital or other systems of how capital flows or other systems about how people get promoted or people advance in their academic career, their professional career, etc. Um, you know, VC is no different. The system rewards familiarity and not always potential. Um, it's clear to me that women are sometimes overcoached to de-risk, and that's a myth with women. Women are actually very, as I said earlier, very risk aware. They're very attentive to the risks in their company. Um, and they're overcoached to think about risks instead of being overcoached and encouraged to scale. And that's where I think we see value is that we tend to stay on the growth feedback, encouraging women to do what they do well is to scale with a deliberate and intentional eye to execution. Um, but as I said a few minutes ago, the 5% problem really, I think, is rooted in networks and sometimes not merit. So it's really important for women founders to build out their networks so that they are part of that playing field where the networks are already entrenched and not necessarily solely relying on networks that are unique or sized or formed or created for them. We consider ourselves at Sandpiper to be an alpha investor just as much as an impact investor, and so
Hmm.
we don't expect anything different from our founders in performance than we would. Because they're a male or a female, we expect the same as every alpha investor out there, and I think um, there's a recognition that your network has to be um, exploited and first has to be created and able to be exploited, right, for the benefit
Hmm.
of your cap table.
Yeah, that's interesting. I remember a few years ago I read Gordon Pitt's Unicorn in the Woods,
Mhm.
and he certainly started that story with you know, the founders getting out of Atlantic Canada.
Right.
Any tips for people as they're thinking about travel and building those networks?
Yeah, I mean, I'm a big fan of, efficient networking, and one of the things I know we do is, um, as fundraisers ourselves, because we have to raise the money for the funds that we deploy into the companies that we invest in, is how can you consolidate a lot of networking in a short period of time? So wrapping it around a conference, but also using conferences very strategically. So building a big list of folks that you expect to be attending, um, making sure that you've got appointments set up in advance, and most importantly, spend the time following up on those networks post the conference. It's not really the experience on the conference floor that you're looking for. It's the name build out in your pipeline, and then the work that you can do to kinda nurture that network along with, regular updates on your company's performance, and also, regular engagement with, key investors that you'd like to have on your cap table.
Yeah, it sounds like in a lot of ways, like a sales strategy. Like
Mhm.
how do you see successful founders doing this? Like, did they have a very set strategy that they're executing?
Well, it's interesting because the ability to raise money and the ability to sales obviously to create sales obviously have a lot of key um, characteristics of skills that are valuable. So founders that struggle to build out a funding pipeline, um, you talk about red flags. That's usually a red flag that on the revenue side and on the growth side, there's likely going to be a gap there too. So the most successful founders that I've seen are really good at both, but more importantly, prioritizing which one is at the front of the train and which one is at the back of the train. And what I mean by that is real traction for your next round is going to come from revenue. It isn't going to come from tripling your VC um, pipeline. And so, these sprints of intensity to grow your revenue and prepare for your sprint of capital raising are really nuanced because you're actually, could be wasting some time, um, spending a lot of time meeting people face to face for your investments, for the investment side, if in fact your revenue growth isn't headed towards the traction you need for your next raise. And I think that's something that's really important. And we found that women do a really good job of prioritizing that and making sure that they're playing the right role at the right time in their company to accelerate not just its capital, but more importantly, its revenue that then rewards them with the capital to scale even further.
Yeah, that's such good advice. And yes, perhaps women are used to wearing many hats so they can take them on and off. I like that. Um, as you think about, you mentioned systems change. So as you think about something you'd like to see in the venture ecosystem in terms of what might shift over the next 5 years, what would you say that would be?
I think what I would love to see is if we had broader pattern recognition, for example. I think, the pattern that we see in our portfolio and our pipeline is that it is as strong, meaning the companies and more importantly, the ideas to commercialize are as strong as any of our, um, neighborly, friendly VCs that are also in, an investment space, maybe with a thesis that might be slightly similar, but not necessarily, focused on gender. And, because Sandpiper, is very much focused on that, like I said earlier, that alpha return, and we don't set any different expectation and we are achieving performance, then I would hope that um, pattern recognition of what's possible in maybe an underrepresented or an area where people don't look normally is ours for the taking. And if
Yeah.
any other VCs want to join us, they're welcome to it. So I would hope that pattern recognition changes. The other thing I think would be really interested is if we were able to move towards even more diverse decision makers at capital tables. We've seen a big shift in the last number of years, um, with a lot more women in seats of decision making when it comes to capital, particularly in the VC industry. And I think that's important. Now, we see a lot of those at earlier stages in venture capital companies. And I would hope that over time, institutional investors that are investing in funds like us, but also, funds that are maybe, haven't had a chance to develop their female talent to the point where they're at the partner table, that they get them to the partner table because that's where ultimately the investment decisions and that bias, or as some might call it, the pattern recognition will be more relevant. And so those are two things that I hope we'd see in the next 5 years.
Well, and I like this is my words, so you can correct me if you don't agree with my framing, but reframing potentially bias to pattern recognition, and it feels very strategic and hopeful, and saying,
Mhm.
okay, well, now if we recognize this pattern, we can invest strategically to achieve these different outcomes. So that's a takeaway for me.
Yeah, and I would agree with that takeaway. I think, what I would add is maybe a bit of advice for the founder who's maybe confused or perplexed around, I need capital to scale and I can't scale until I have capital, that kind of conundrum. Um, I would remind them that, what gets capital isn't, um, who is making decisions. What gets capital fundamentally is undeniable traction, even if it's small. So I think an obsession, a healthy obsession with your revenue, and an obsession with I need to show this traction to any investor, whether it's an angel investor, whether it's a creditor, whether it's a VC. That obsession with revenue, I think, is um, or particularly traction on building out your go to market strategy and how customers are going to engage with the product. That repeatable um, traction and the management team's ability to get that traction moving is what actually attracts capital. Doesn't matter who you are. Um, that's ultimately what gets the investment across the finish line.
Yeah, exactly. Great advice. And I have a question here about, what's a sign someone shouldn't raise venture capital at all? And then I'm going to throw in an additional piece to that because I heard you say one thing, which was what I heard as we have to believe in or support people's ambition or like
Mhm.
sponsor them. So,
Right.
so maybe it's like two sides of a question, which is when should someone not, or if they're not thinking about it, how might you encourage them to have that ambition?
Yeah. So I'll separate them into two if I can. So on the first side, a sign that somebody shouldn't raise VC at all. Um, if you're interested in control more than growth, VC is not for you because we're built to put pressure on to scale, right? Our investors invest in us because that's what we're going to do. And so if you're going to accept VC money, you have to accept it that we're high risk, we're driving returns for our investors, and we have an expectation around the volume of growth. So if you don't want that and you want control, then VC is probably not for you. Another one is, the issue of pressure for speed and accountability. I think if you're comfortable in a space where you feel passionate that you want to accelerate the growth of your company, then VC is probably right for you. If you're at a stage in your life and a stage in your business where you believe that you have sufficient accountability, you're self-motivated to be accountable, but you want to go at a different pace and that you think bootstrapping might actually create a better outcome for you, then by all means, that's a company that probably shouldn't be raised in venture capital because there'll be friction at the board table because the founder and the investors will be at cross purposes. Conversely, on the other side, if if a founder is questioning whether or not they should be accepting VC, I think there's two things. One is if they're so passionate about the problem that they're trying to solve, and they know that there's a purpose and an outcome that they feel has to happen faster, um, that's a really good time to think about whether or not the capital from a venture capitalist will push you towards that ambition, and that not necessarily that ambition because you already have that, but push you towards that goal. And we see that a lot with founders, particularly female founders who are creating things based on purpose in addition to practicality and practical use in environment. So if your purpose is driving you to the point where your obsession about success is limited only by capital, then that's definitely a time to talk to a VC. The other thing I think is talking to a VC long before you do a raise. And so whether you want to have a VC or not, having a conversation with a VC early enough to understand what are some of the things that they see might be missing in your targets for traction or in your targets for your company that you might need 6 to 12 months to kind of catch up, then talk to a VC early. Don't leave it till the time you want to raise because you might have built a beautiful apple pie when we want a lemon meringue pie. And that actually happens fairly regularly. So
Right.
don't guess at what investors want. Meet a couple early and ask them what exactly they're looking for, and then let that inform, as the CEO and founder of your company, what your strategy for growth is going to be.
Yeah, that's really helpful. And also, I like the takeaway of, if capital is the limiting factor to your ambition or your purpose, I think that's also a really good takeaway for people.
Mhm.
So you're now influencing where capital goes. How intentional are you about that power or influence? And how do you think about backing companies that create broader economic impact or maybe societal impact?
Well, I think the intentionality is extreme, if I can say it that way, because we know that capital access and recognizing, for your listeners, that venture capital is only a small part of the types of capital that are available to scale a broad group of businesses, right? In Sandpiper's case, we're particularly focused on SaaS products, but there are other ways to drive growth in other companies that there's different terminologies for the types of capital. But it's clear that capital shapes the outcomes and shapes ecosystems. And so for that reason, at this stage of my life, personally, I'm extremely focused on where the capital goes and how to get it to the places that are in the shadows and not necessarily in the bright light where most of the capital out of habit tends to coalesce. I think, the other thing that I'm quite intentional about is not just backing, those overlooked founders that might be in the shadows, but more importantly, um, that we do it based on performance. So we're expecting, and certainly I was expected when I would have my own business, and I expect that the companies that I invested in as an angel to have performance at the level of which is expected to be best in class for their industry. And I don't
Mm.
think I didn't take investment from investors without understanding that I was going to give it as much much effort as I would have with my own equity. And I think that is an important part of, as you restructure how capital flows, we're not restructuring performance expectations. We're restructuring the fact that we can find high quality performing companies in the shadows that don't get the chance to scale because they don't have capital. And that's really, I think, what I like to focus on. And lastly, that returns and impact are not in conflict, right? They compound. So the more we have impact in areas where capital is not flowing, the more we're going to get that to happen, and the more we're going to see different types of companies emerge from the shadows that are going to be successful that we hadn't expected to be successful in our ecosystem. And when we have all people who want to be entrepreneurs with good products, scaling and getting momentum, that's actually an indication of a really productive economy. So it's not simply about is it impact, is it right, is it feminist leading, or it's about how do we make sure that we unleash all the possible energy in creating economic growth we can by not leaving folks who can grow strong companies off to the sidelines unsupported.
Yeah, that's so exciting. And if a founder is listening right now and wants to raise capital in the next 12 months, what should she do first? I think you gave some advice on that, but help clarify it for people.
Sure. Well, as mentioned a couple of times, get undeniable traction, even if it's small, that's essential to be able to talk about the traction that you're getting. Build a really tight circle of believers, um, and build those believers early, not when you're raising capital. Build, folks that are going to give you love around your pitch, so that you can get courage to be, the best pitcher that you can be when you're pitching your company. The other thing I'd say is know your numbers cold. Talking to a venture capitalist or any investor with equity or credit and not being able to articulate a clear financial picture for your company is very problematic, and it calls into the light a credibility issue. So you have to know your numbers cold. And then the other thing I'd say is like practice, practice, practice asking for capital, and be sure to ask for it clearly and confidently. Um, when you stumble over your ask, you create and this is, for all founders who are pitching, you create a moment of pause in an investor's mind around the ability for you as a founder to actually pitch a product. And it becomes even more problematic if you're asking us to invest in you so you can pitch your product to customers. So make sure you have your ask clear and confidently well rehearsed.
Yeah, and we're actually, as part of this project, providing investor Q&A as a platform for people to practice in. So we
Right.
have a group of folks who are practicing their pitches quite regularly. So
Mhm.
that's a good note to end on. And yeah, my personal takeaway, 'cause I think it's pretty simple to communicate to people is, like, how do you have this dream, this purpose, and how do you then use capital to really fuel it to get there, and really, how can you see investors as partners and really doing that?
Yeah. Yeah, and Vanessa, I mean, I just add too that, like, know yourself as a founder, because not
Mm,
all founders want to be scalers, right? And that's okay. But know that you're either the scaler of your company or that you have a plan, and you're comfortable with it, and you know yourself well enough to know that another person is going to join you on that journey to scale your company. That's not an admission of failure. It's an admission of intelligence and wisdom as a shareholder in your company. So, I just want to make sure that, the brilliance of being an inventor doesn't have to be lost in the brilliance of making the best choice that you can for somebody who's going to help you scale your company, both from the investor side and from the operation side.
Yeah, that's good advice. So great advice to end on. Know yourself and really know what's going to be best for you. So thanks so much, Kathy. I really appreciate your time and your insights.
Thanks, Vanessa. It was lovely.
Thanks so much to Cathy Bennett for joining us for that awesome conversation. I learned a lot. And if you'd like to get more information about Sandpiper, you can find them online at sandpiper.vc. And we have some great conversations coming up in our Win VC podcast series as well. So you can find us online at pond-deshpande.ca/win-vc. We have some great podcasts coming up in the Win VC series. I hope that you'll follow along on your podcast channel of choice. And we really hope to see you next time.